Hello traders, Gary Wagner here. Approximately 1:20 in Honolulu, 7:20 in New York. It is Monday, 28th day of June 2021, and this is the daily report for gold and silver. We saw fractional modest gains in gold, trading up $1 in New York, and that dollar is pretty much eroded as it trades in Australia, currently at $1,777.80. We saw silver gain about 11 cents on the day. We'll talk about both of those in detail when we look at our charts. That comes after the price board, but the show begins now. As of 5:50 p.m., gold futures are currently up $1 on the day at $1,778. One interesting aspect, gold is up precisely what the dollar did today, trading up at 91.89.5. This first chart that we are looking at is a daily candlestick chart of gold. We have moving averages, the 200, 100, and 50-day. We also have two distinctly different Fibonacci retracement sets. The first thing that I want to discuss is the fact that when we look at support, that does come in at around 1767. It's based upon those two retracement sets, which we'll talk about in a second. The other thing is distinct resistance at the 100-day moving average. We can see a series of highs that come in and try to challenge that particular price point, but we have not seen over the last 7 trading days the ability for gold to break above this on a closing basis. And traders, we also need to comment on the 200 and 50-day moving averages. The 200-day moving average is drawn as a dashed line in red, and then the 50-day, which is a green solid line, which you can see here. Now, what we do have is the two moving averages coming closer together. If the 200-day crosses below the 50-day moving average, that would create a simple chart pattern called a death cross. Now, if the 50-day moving average by chance crosses above the 200-day moving average, which is still possible, that would require, of course, a nice uptick in gold, then we would get the truest form of a golden cross with the 50-day crossing above the 200-day moving average. This second gold chart is the same as the daily we just looked at, although we have compressed the data sets so that we could show the onset or the beginning of the long data set we're using, which begins at the lows created in March of 2020 up to the all-time high at 2088 that occurred in August of last year. And when we do that and we plot the 50% retracement, what we can see is not only strong support in terms of a support area for current pricing, but we can see historically speaking that this particular price point lended itself back to support here. We've got these lows that occurred back in November and December occurring right at that data point, and as a point of resistance back in March through June and July of 2020, you can see a series of tops that came into the market, but were unable to break above that until we had a solid break, and that's the point in time in which we saw gold trade to 2088. So there's solid historical data that really alludes to this being a very, very important price point. However, all things being equal, we can easily say that the recent price activity, which has been very, very muted over the last 5 trading days ever since this nice surge to the upside last Monday, is the fact that we have summer trading, which means that we have lower volume than usual. I've just put up volume for gold. That is truly summer trading. And the fact that traders are awaiting the jobs report on Friday to see whether it comes in under expectations or over expectations, because that really will guide the future direction of gold. For the meantime, we remain flat with no active trades in gold. Silver had a respectable gain, although not extremely strong, up about 12 cents when you round it up to $26.20 today. We are looking at a daily chart of silver, the continuous futures contract. We can see that today's close did in fact come in above the 50% retracement level at 26.11. That is important. We have had solid support based on the 200-day moving average. That's this dashed red line, which is trading with the proper bullish alignment, meaning the 50-day moving average is the highest, followed by the 100, which is followed by the 200-day moving averages. This is a compressed chart so that you can see the entire data set that we are using. In essence, it begins at these lows back in October at $21.85, up to the tops at $30. That occurred in February of this year. When we do that, we really create a nice data set for retracement levels. We can actively see that this is the first close above that price point in 6 trading days, and I am pegging resistance at 26.60. That is based upon the 100-day moving average, and I am pegging support at the 200-day moving average, and that occurs at $25.81. We are also flat in silver with no active trades, awaiting the results of the jobs report. Copper did trade lower today after trading to approximately $4.31 last week, is now down to $4.27.6 per pound, and that is a net loss of about 1.5 cents or 0.37%. We are looking at a daily chart of copper in which we can see these lows that occurred back in March of 2020 when copper touched pricing just below $2 a pound. We can see this historical move to the upside in which we went to an all-time record high at approximately $4.87 per pound before going into a defined correction, taking it to these current lows that come in just above $4 per pound. Right now, we can say that the moving average, the 100-day, is absolutely the point of support that we need to see copper hold. We'll enlarge this. That comes in right below current pricing, actually. You can see that in blue, and that's covered up by current pricing at $4.27 per pound. We'll have to see if it can hold this area because copper did attempt to stage a recovery back when it hit those lows. We can see that right here. We've got a defined V formation. However, it stalled very quickly. After 3 days of sharply higher pricing, of course, we saw modest declines over the last 3 days. This is a key and critical price point that copper needs to hold if it's going to stage a true recovery that began at these lows at $4.07. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.